Something I'm going to talk about is ExxonMobil. Exxon's ticker is XOM. So just a little bit about Exxon. Exxon is a top-tier global energy company with a strong earnings report, and they also have many strategic investments in traditional oil and emerging low-carbon solutions. They also have a high free cash flow, and they constantly give good shareholder returns, which makes it a good investment for income and growth opportunities for investors. Their market cap is $425 billion. They also have free cash flow of $34.4 billion. Their debt to capital ratio was 17%, and their revenue for the last fiscal year was $349.6 billion. And that was a 3.3% increase from the previous fiscal year before 2024. Exxon has a price to earnings ratio of 13.3 right now. That's 2.9 points lower than its 10-year average, which is usually at 16.2. They also have a free cash flow yield of 8% right now, and then the current stock price for Exxon is listed at $103.10. Some of the catalysts for Exxon include the low-cost production growth expansions they're trying to do in Guyana and the Permian Basin to help move production at low break-even costs. They're also trying to do an energy transition, which means investing in carbon capture, hydrogen, low emission fuels, which position Exxon ahead of the game when it comes to their competitors. Some of the risks Exxon needs to worry about is their commodity price risk. Revenues are highly sensitive when it comes down to oil and gas prices changing. And then they also need to worry about their ESG, that's environmental, social, and government mandates, and governmental policies as well, because that affects the regulations when it comes to oil growth and demand. Exxon also needs to worry about their execution risk because the large-scale energy transformative projects or transformation projects can take time to deliver, which would take away from their revenue.